For the time being, back to some earnings and back to some defense plays as well. Data Patterns is the next company on our radar, and we have Mr. Srinivas Gopalan Rangarajan with us now. Thank you very much, sir, for joining in. And it's been a very good quarter as we get this conversation started. I'm just pulling up the numbers as well. For the fourth quarter, your revenue is up 117%. Your margin is at 38% versus 51% year on year. But the profit has grown very smartly, about 61% as well. Can we start by talking about the order book? The order book declined quite a bit, 33%. I mean, clearly you're executing. But what's the visibility, sir? This year, FY26, what is the visibility on the order book growth? And then we'll talk about revenue as well, the revenue growth that you are looking out for. Please.
Yeah, thank you. Our last year order intake has been quite lower than expected. It's got postponed, but they are intact. So we expect the contracts to happen this year. We expect more than about 1,500 crores contracts to happen this year in terms of new orders. So our revenue guidance remains 20-25% on top and bottom line growth.
Okay. Revenue guidance for FY26, 20 to 25%, both on top and bottom line. But order inflow, your guidance in FY26 was about 700 to 800 crores. Now, wherever you fell short, what is the timeline? When do you expect the orders to finally flow through? And for this year, what is your, your expectation? Say by first half, where will the order book be? And by the end of the year, if you could give us some idea.
Yeah, we expect in the first half, we should get probably 600 to 800 crores of contracts. And the rest, about 1,000 crores orders we expect during the course of this year. So the contracts have got delayed, but this is likely to happen in the next 5-6 months' time.
So if you could just give us a number, the order book as of 31st March FY25 versus where do you see it by the end of FY26?
We expect about 1,200 crores FY26, end of FY26 is what we're expecting after executing contracts during the course of this year. There are a number of products which have started development ahead of time, and these are coming to some level of completion. And if these contracts also happen, that will be a big boost to our order book.
Okay. What about margins, sir? Again, I'm talking full year margins. In FY24, you were at 43%. That number came down to 39% in FY25. Obviously, it will depend on the kind of projects you're executing, the product mix as well. So just tell us what happened here. And as you talk about building up the order book again, what will be the margin profile for these new orders that you're awaiting?
Last year, or the year before last, we took some strategic contracts, very large contracts, which involved just not the electronics, but the full system. We took this as an important step towards moving from only electronic systems to complete equipment. And that was very important to us from a data patterns capability upgrade point of view. So we've done that, and that has given us a lot more competency in addressing big markets and big contracts going ahead. So we took the strategic decision, and those contracts were of lower margin. However, we were able to compensate that with other contracts with normal margin. That is why you see a dip in overall margin. At the same time, the bottom line business has gone up, maintained the 20% growth, which we committed to the market last year. Going ahead, I think we continue to keep it's a bottom line business. We are IP-driven business. So we will retain our bottom line as we go ahead. We may take some 1 or 2 strategic contracts with lower margins, but that is to build the competency in the company and large markets going ahead.
It's interesting that these strategic contracts are actually coming at lower margin versus the specific product contracts, is it?
Yeah. See, what I mean by strategic is that we've never done complete systems like building, construction, all of them, which goes into the complete radar.
Okay.
We've taken up these things because when you look at opportunities, they're coming not just for electronic parts and subsystems and radars, but all the conglomerate systems which go along with that.
End to end.
Yeah, end to end.
End to end. But end to end is slightly lower margin. Got that versus just the radar or just the equipment that you would be supplying. Understood that. Thank you.
All right, sir. Let's focus a little bit on the international opportunity then. The international order book, I think, is currently mid-teens of your total order book. How much is expected to increase, say, in FY26, international business as a percentage of your mix? And what are the markets you're targeting? Europe, East Asia, if you could name a few? And also clarify on margins of export business in comparison to domestic business. Is it better? How much better?
Last year, we did very good export business. We did about 15% of overall revenue was in export. This is mainly to Europe, East Asia, as well as UK. We continue to have order of about 100 crores from UK. So the order is there, and we're also getting more orders from there. So we delivered a system called transportable radars, transportable precision approach radars for flight guidance and for aircrafts. Now that we've sold the first systems to NATO country, we've got other inquiries coming from the rest of the world. Maybe this will also pick up as we go along in the course of the year. The focus, but however, has to be in India. There are a lot of large opportunities in India. I think we need to address those opportunities, and parallelly, we should start looking at export business. What we do development here can also be exported because what we're designing is our world-class systems.
Okay, and margins of exports, I missed that point. Is it better than India?
No, it will be around similar range. Some systems where we separate OEMs will be lower, but still reasonable margins. And going as a complete system, if we sell it, then the margins will be similar to what we do in India.
Okay, got it. What about your Capex plans, sir? Since you're indicating that there's a big potential out there for your company as well as for the industry, what kind of a Capex plan do you have? What is the turnover that you're looking at, asset turn out there? And by when do we see this?
See, Capex is going to be in two parts. We raised about 500 crores 1.5 years back. This is essentially to do product development and build Capex. We spent more than 150 crores on product development in the last 1.5 years. Those products are at a very near stage of completion and going into trials. This is to really enhance our TAM going ahead, because we need to be a 5-10,000 crore company. We need to have at least a TAM of 30,000 crores. These products will address a very large market. That is that some world-class equipment we designed with in-house IP. So that is coming up. Second, we're also going to spend about the next 1.5-2 years about another 150 crores, which will be spent on building an infrastructure and test equipment. This is to address the large opportunities. If we get the contract, we should be in a position to address and deliver on those opportunities. So we're moving ahead, seeing that everything is, the foundation is maintained and kept. We're also recruiting more. We're now really about 1,100 engineers working with us. So all around, we are building competencies and capability to address the larger opportunities we expected to happen in the coming years.
Okay, all right. Thanks a lot, sir, for joining in. We look forward to chatting up with you as the year progresses. For the time being, you're sounding quite optimistic on prospects.